Hey traders, welcome to Charts and Coffee. Happy non-farm payroll Friday, everybody. Great to see everyone. All right. So we have non-farm payroll. I mean, there's not much else to say other than that. Let's go take a look at the reaction on the number. Now, anytime we have a major, so what is a hot zone, right? So back in early, I don't know, I forgot when Forex Factory would have gone live, but it would have been in the early 2000s. And I was a brand new Forex trader. I knew what US data points would move the dollar or move the US markets and things of that nature. I understood US macroeconomics, but I didn't know the schedule for other countries. If I was trading back then, the Deutschmark, if I was trading, the euro didn't exist, right? I was trading the French franc or the Swiss franc or whatever. So I found myself over to an international economic calendar, and I've never left that. But what was so great is they color coded the potential impact. So getting to know what data points were important in other countries was really, really important. And I was so grateful that they painted these red when they were potentially or expected to be high impact market movers. So I thought, oh, great. This is a red hot zone. What is a hot zone? So the way that I looked at it all those years ago is it is a scheduled, we cannot prepare for something we do not know is coming. So it's a scheduled economic event, hopefully a data event, because speeches are very different, obviously in the time that they're happening. The market can move a lot. Speeches, press conference, a little bit different type of hot zone. But a hot zone is a data event. It's usually going to be driven by a headline number. Non-farm payroll probably takes the market 10 to 12 minutes to fully digest. What do I mean by that? We get the headline number, but that report is enormous. So there's a lot of data that the market has to consider after it gets that. You can see here, average hourly earnings, headline number, non-farm itself, headline number, unemployment rate. Those are the three big numbers, but then there's more. So that probably takes a good 10 minutes for the market to just absorb. So don't assume the initial reaction to the headline number is the only reaction that we're going to see. That's just not usually how it happens. So make sure you're looking for those events. So data events give us these hot zone type reactions. Earnings can do that. So we have non-farm payroll. Now let's go over to the chart. I'll bring this down to a 5-minute. There's your 8:30. There's your 8:35. Remember, give it about 10 minutes. And then lo and behold, right around 8:40-ish, things start to do what? All right, we've looked at the headline numbers. We've made our initial dramatic, these are just kind of running towards filling orders, AKA, sort of stop runs. And then now cooler heads start to prevail. Now we can see a little bit more layered, nuanced type reaction. I am trying so hard to drink water in 2022 that has not been run through ground up coffee beans. It is definitely a habit. Um, but I keep hearing how good it is for the brain. So the way I figure I could use all the help I could get. So anyway, so now we can see cooler heads are prevailing and now things are settling. And we've taken back almost half the shenanigans. Take a look. There's your top of the non-farm payroll, bottom of the non-farm payroll. We've taken back almost half the shenanigans. Isn't that incredible? So, this is the way that I'm going to look at, data events like this. I hope that helps. And then let's also make sure we do this. All right. This is the candle for the Nasdaq. We have not made a higher high. We have not made a lower low. Right now, remember, there's an echo effect when we have an 8:30 hot zone, because at 9:30, now, look, Forex, futures, we've been able to respond to that. We have liquid markets at 8:30 a.m. Eastern. Now, equity players at 9:30 in 25 minutes, they get to make their reaction. So it's sort of an echo reaction. We'll see the second wave of attention and participation and so forth. But right now, where we sit at 9:05 a.m., this is an inside candle. We've gone exactly nowhere. Not a higher high than yesterday, not a lower low. And remember, NQ is the most rate sensitive of the big three indices, but ES looks exactly the same. Inside candle. Let me zoom in so you can see that. See that? Not a new higher high, not a new lower low, stuck inside the range of the previous session, inside candle. Some of you might know it as a harami and Japanese candlestick jargon. So, Dow, a little bit lower low, little bit lower low. I think the Dow is probably within the next few sessions, if we don't really start to sink rapidly, we're probably going to see the lower JT multi row, our 34, go green over green. So heads up on that YM. Really interesting action there as long as the XLF and XLK, even XLV, continue to move higher. All right, so that's what we have post non-farm payroll. Let's jump into your questions. Good morning, everybody. All right, Fit for King. I remember your comment from last night's video, and the request was for Tesla. You got it, my friend. Okay, so the way that I'm going to look at Tesla, this was a heck of a wick, right? That was definitely a dramatic wick. Uh, Tesla's in a range. Tesla's in chop. So if you've been following along with my work for any length of time, you know that we're going to take a look at the structure before strategy. It's neutral. Okay. So two things we can do. We have a low here. We have a high there, right? Okay. So what I like to do is ask myself two things. This was a nice gap close in here, and that happened at gap close basically in this area. We have a point of control. It's a volume derived level right in that area. So we do have some support right in there. Okay. Notice that even though we pierced it with the wick, prices snap back up above that level. That's some important reaction. And we're still hovering at that area. So that's the gap close support that I've been talking about for a while. What if we went ahead and pulled a retracement on this thing to say, hey, last major move, where are you going to go? Remember, the zone that I like to see is really between the 38.2 and the 61.8. The sweet spot being that 50%, the halfway mark. Look, we talk about this even in non-trading life. 2 steps forward, 1 step back. That's sort of how things tend to move. Well, there's your 2 steps forward. Here's your 1 step back. I do like that zone. And then, we can also see that right here, we've had support before. So just based on price. Okay. So that's where I'm bullish Tesla. I don't want to short Tesla. I just know that within the context of chop, all right, within the context of chop, it's going to be a little bit more volatile than if it were still in an uptrend, which it is not. But I still have the bullish bias because when we have chop, as we have had since early December, when we have chop that's preceded by an uptrend, right? The bias is still, the way that I'll look at it, it's still bullish. Okay. And that's the way I'll look at this area here in Tesla. All right. Thanks for the question. Hey there, Mark. Great information on yesterday's afternoon video. Huge thanks. Oh, very cool. So yeah, my sector folks, we sent out a little macro breakdown. We typically do a little bonus video midweek just to see where we are. Sometimes it's so easy to get just sort of, even with non-farm payroll, we get caught up in the intraday movement, and it's easy to lose sight of the bigger picture. It's easy to lose sight of the fact that right now the indices are an inside day. They're not really going anywhere. It's easy to lose sight of that. So yeah, I like to do that for us in the sector once a week. I appreciate that, Mark. Thanks for the feedback. All right. What is the next question? Does it look like more NQ pain? Well, one thing you can do, and I think this would be the best way to trade the NAS. And I was just talking to Lorna this morning about the Nasdaq, because one of the things that I like, 2 support levels. One is volume derived. That's my V score. The other one is Darvis derived, which is price based. So I've got a price based tool giving me support, and I've got a volume based tool. So two different processes telling me that, hey, this could be important, not just because of price. Most traders, and when I say most, 80+% of traders look at secret squiggles that are some type of, algorithmic, mathematic, sometimes even arithmetic breakdown of open, high, low, close, some combination. And that's fine. But most traders don't need another price-based indicator. They need more volatility understanding, volume understanding, in other words, more layered analysis on the chart. Most of us don't need another price-based tool. I say that, including myself. The last few years, what I've been doing much, much, much more of is, hey, how do I measure volatility? And how do I understand time? And how do we measure volume? If you looked at what we've been doing over the last few years, it's not more price-based analysis, it's volume and volatility based. So volume wise, I'm really keeping an eye on 15.6. Price wise, I'm keeping an eye on 15.5. And in I think it was yesterday's free video. If you haven't checked that out yet, I'm pretty sure. Yeah. In the Are We There Yet video, um, let's see. Yeah, I broke down, I think, all three of the indices, and I talked about what's going on the NAS. So if you haven't checked it out yet, or if you do have a question or whatever, leave a comment at that video, Simple Trading YouTube channel. But that 15.6 to 15.5, as you can see here, that's on the radar. That's on the radar. V score, +1 standard deviation, and then the price-based zone, which really starts at 15,550, extends down to about 15.5. I'll be watching that. So I hope we get a little bit more weakness in the NQ, because within the context of chop, I do want to buy it. Now, how long do I want to be bullish? If you recall, these videos that I refer to, I mention them. So look, number one, they're free. You can go watch them at your leisure. But number two is, a lot of times I'm breaking down some of the concepts that we discuss in these videos. And if you want to know how I momentum trade, it didn't end up triggering, which was, do we have maybe the possibility for an oversold bounce? How do we keep from buying something and then seeing a face ripper of a sell-off? Check out that 10-year bond. It never triggered. It never triggered. How do we keep from at least decrease the probability that we're going to buy something that's just going to keep moving against us? Check that video out. But the one that I wanted to point out for the seasonal, and what my window is for potential bullishness, is in this video here, Building Good Trading Habits for 2022. I am pretty bullish into mid-February. So if we do buy something, I'm not saying we're just up and away in 2022. Hardly. Really good chance we're going to see rate hikes in March or May, maybe even March, right? That's way sooner than the initial June expectation. So the March Fed Fund futures are starting to look a lot more like that might be where the first quarter point bump comes. So if I'm looking for an opportunity and I'm long, that window is going to take me to mid-Feb max. Okay. So I'm not bearish yet. Not bearish yet. And an inside candle is hardly reason to be bearish. But of course, we'll see how today ends. We'll see how the Wall Street bell responds to this action. All right. So next question is DHI. Yeah, I am in DHI. We just put in our conservative level entry. We already have our agro level entry. And I would say, of all the sector secrets entries that we have right now, this is probably the one that's taking on the most water. It happens, right? We're still well within, especially for the conservative. We're probably quite close on the agro. We might have to ditch the agro. We might have to just let that agro leg of the trade go, because we want to keep our losses to paper cuts, right? But the conservative is in great shape, I think. So we'll see what happens with this one, but it's probably the one that's shakiest, TT, of all the setups that I have open right now. All right, because we've also ventured into things like Cisco. So I think we're in good shape for the most part on our open book of trades. All right, so next up is, let's see. Yeah, for those of you that are wondering, what does this mean for the market? Is in terms of interpreting, I'm never gonna sit here on the data, the numbers itself. That's for the chuckleheads on television to do. Um, Let them sit around and play, pretend economist. I guess some of them actually are economists, but let them sit around and wax poetic about what that means. That stuff means very little to me. The only importance that has is what was expected, which is this column right here, and what did we ultimately get, which is this column right here. Beyond that, I'm going to rely on, there's that whole thing. I don't listen to what you say, I look at what you do, right? That applies to markets too. I'm not going to worry about what the numbers were. I'm going to look at the reaction too. And look, we'll know better after 9:30, but after the initial sell-off, this market's already starting to move higher. So let's see what happens during the clearing range, which is the first 30 minutes after the bell. But I always wait to see what price has to say about it. I mean, look, unless I don't care what I have to think about it, I certainly don't care what anyone on television has to say about it. We want to look at price, right? We want to look at the actual reaction. All right. Is there a minor low in the NQ? Jimmy, no, I'd say there is an inside day, as I mentioned before. But yeah, great question. It's an inside day right now. Could it turn into a minor low? Maybe if we put in a lower low, than yesterday, we could start once again because that would reset. Well, we don't know yet. Let me put it this way. Right now, we have an inside day, but if we're able to take out that lower low, yesterday's candle, yeah, to your point, that would be a minor low if we hold that followed by an inside day. But to confirm that is a minor low, we need maybe not this candle. If it makes a high higher than yesterday's high, then yes, we have looked to complete that. But if it's Monday, we need that higher low and higher high to confirm. So we'll see. But I think, yes, I see what you're saying. We could know today, probably Monday, though. All right. So next up is the wavy green and peachy. Oh, that looks peach color. Okay, cool. It's red and green, but yeah, is the wavy green peachy line a slow stochastic? 100%. So Trader Mo, yeah, I've been talking about a slow stochastic for lots of years, but I use a very unusual setting. So if you're looking at a slow stochastic, right, make sure it's a slow stochastic, not just a stochastic, right? I have a couple videos. The one on crude oil that I did I don't know, what we did about a week or so ago. That one has all the settings. It's a 21K, right? 3D. And I use now the 20 and the 80 as the upper and lower bands. That's pretty common. I think a second most popular reading would be a 70 and a 30. That's probably a distant second in terms of popularity, but I use the 2080 and I slow this thing way down, 21K 3D. And that's probably what makes my slow stochastic kind of unusual. I have very, very, very slowed down settings. So that's really it. Whether you like, now, if you want to put a secondary 70/30 layer in there, you could, if you want to look at it. But I use the 80/20. I think 70/30 is a little too aggressive because I want to see prices at least touch the 20 or dip below the 20 and then use a 21K 3D. So that's definitely it's been my go-to for the better part of almost 30 years. Only for choppy markets, though, which is a great follow-up. Slow stochastic is invalid in double red. Absolutely. Oh my gosh. When you guys get it and you understand applying the right tool in the right environment, that just made my day. Yes, it's invalid in a trending market. So what do? The markets are range bound. Thank you, Darvis, for identifying that, right? And the lower row of the JT multi measuring the 34 EMA for recognizing that. That is what validates this. Without the range bound, this is useless. We have to be able to look at our own secret squiggles, whether it's ones we've created or whether it's settings that we really like, and look at them with a very discerning approach, which is to say, look, when is this tool the wrong tool, right? So in chop, it's great, right? So by the way, so is a ready aim fire. If you're a big fan of understanding overbought or oversold, I will tell you this with a lot of confidence. Number one, ready aim fire, fantastic. Number two, the slow stochastic. I've got 30 years telling me, hey, this is really good at identifying those range extremes in a choppy market. So those are the best two for chop, bar none. So, and again, it has to be applied in the right environment. Absolutely love it. So next up is Nvidia. Sure. Nvidia's in chop. It's kind of closing in on becoming a little oversold. It's probably, if you had a 70-30 year, it's probably sitting at the 70. For example, if I change this to 70-30, right? Here's your 70. And I don't recommend a 70-30 setting very often, but you'll see here, there's your 70 reading right there. I like the 2080, but again, if you want to keep an eye on both, no harm in that. Or, one thing I thought about is, sometimes I used to use a 90-10. If market action was really wild, 30-20-10. It's kind of a neat way to look at increasingly exaggerated levels. So I don't know, Lauren, about that might be something we have to. He's gonna kill me. I'm kidding. I'm kidding. I'm kidding. But yeah, you could easily change the setting just to take a look. But Nvidia is closing in on becoming oversold. That's the secret squiggle, right? But where is the price action? Beautiful Darvis right there. I like this as an oversold. And by the way, chop was preceded by a trend. So we definitely have bullish bias. Nvidia oversold. I like it a lot. I like it a lot. And we could have a minor low setting up right now. So thanks for the question. Lorna says, I heard my name, but no freaking idea what bus you just threw me under. I was kidding. I was saying we need to tweak the slow stow. I figured I'd mess with you first thing in the morning. All right. Microsoft, sure. Sorry, gang. I know we're running a little bit over. Microsoft, same idea. Be careful with Microsoft. We might be better off focusing on XLK. Microsoft's a heavily weighted, one of the two heavily weighted stocks. But I like the oversold Microsoft. It's being a little bit more volatile than I'd like. This is where, oh gosh, you know what I would tell you all to do? If you're interested in Microsoft, Quenisha, this is what I would tell you to do. Check out the video, because this is exactly what the setup potentially was on the IEF bond video that I did just the other day. It never did trigger, but if you go watch, hang on, I'm sorry to give you homework, but I think you'll get a lot more out of the walkthrough than my just, okay, here we go. This video right here, oversold 10-year bond, that's the same way you want to set up Microsoft. Minor low, keep an eye on 318.70. Maybe you want to see 318.80, 318.85 on Monday. Now, if you want to put in an aggro buy today, maybe 1/4, no more than 1/3 of your budget. It's a little early though. It's a little early to do it, but you could, if you want to put in a little bit of skin in the game, you could. But how about wait till Monday and see if that minor low confirms? And if you want to know how to do that, check out that video. It'll walk you through the same process. All right. Can I look at banks? Sure. XLF financials, they're actually pretty toppy right now. I'd be careful. But something like Bank of America, it looks just like XLF. My preference for the XLF has been things like Chicago Mercantile, CME. I like that setup because it has been consistently moving higher and not choppy. But Bank of America looks a lot like XLF. I'm not going to buy up here. I cannot. So if nothing else, wait for at least a small pullback to maybe a rolling 10-day VWAP, maybe the 50% before you jump into that. All right. So let me wind down here. I know that you all have the other rooms to get on over to. Michael says, love the 21.3 and the slow stow. Michael, I can tell you, I've been using that, like I said, almost 30 years. It just flat out works. That's what I've been teaching. Slow stows, it's a built-in indicator on almost Every single platform now. It wasn't always the case. I think the last 7 to 10 years, you've seen the slow stows become built in to the platform. But what's unusual about my slow stow is how much I slow it down. My settings are a little different, right? The 2080 default, but that 21.3, that's a little different. So it is, again, slowing a slow stow down. And that's the secret sauce, if you will, that particular, well, slowness, okay? Healthcare, I can tell you this, on long healthcare, like the long position, we're going to have to take a little bit of heat as there's volatility right now. But I like long healthcare. We're building that as it's sinking into the zone. We're actually sitting at the conservative zone of the entry right now. And Goldman Sachs, we'll wrap it up with this. Um, Choppy, if you want to do something with Goldman, keep an eye on the Dow, keep an eye on XLF, keep an eye on that 50%. Could be an interesting level, but not a clean setup. All I've got going for me here are the VWAPs, which is helpful, and that 50%. So after the retracement of about the halfway mark in chop, you do have a shot at an aggro entry, in this case long. Curtis says a slow stow is money. Love it. Hey, look, if there's a free indicator, I have premium indicators. Many of you have bought the indicator bundle. But if there's something free that I can share with you all that moves the needle, has moved the needle for me, look, it's something I'm happy to do, right? I want you all to have, as many of the same tools that I use as possible. And this one's one of those really easy ones that normally we haven't talked about a slow stow because the markets have been trending. But I think we're going to see a choppy 2022. I think this is going to be an indicator that you're going to end up leaving on your chart a lot this year. Okay. All right, my friends, have a great one. If you're not familiar, hey there, Rogue Angel. If you're not familiar with the settings, yeah, I'll just go through it real quick. I know y'all are going to head on over to the rooms. So first of all, if you don't have time to hang out for the slow stow setting, please, please, please head on over to the Simpler Trading YouTube channel and check out the video on how to trade the chop in crude. I go through all the details there. However, really easy. Find the slow stochastic on Thinkorswim. Find the slow stochastic on TradingView. I have a little bit of a custom, but I'll tell you exactly what it is. So it's a slow stochastic. Make sure you set the percentage K at 21, the D at 3, 21.3. Okay. Now, if you want to test out 2080, which has been the settings that I've shared with you all for a long, long time, that's cool. You can also check out 70/30. That's probably a second kind of common upper and lower band for a slow stochastic. So 21.3, that's the quote unquote secret sauce. I have an unusually long setting for that stuff. And then I like to highlight the middle of the range. So you'll see that little middle band there. But if you go throw a slow stochastic on your chart, 21K, 3D, 80/20, you should be fine. Slow stochastics are also measured on simple moving averages. Mine uses an exponential. But if you are in the Sector Secrets room, it's in the room drive right now. If you have the Raghee bundle, if you purchase that, I'm going to push this through so you have exactly my little secret squiggle on there. But it's a slow stochastic, all right? So I don't want anyone to feel like, oh, I can't get this. No, I've been sharing this one for years. So there you go. I hope that helps, Rogue Angel. I hope that helps. I will see you all in the on Monday. All right. Be good to each other, gang. Be good to each other. Have a wonderful weekend. I'll talk with you soon.